Welcome back to our channel, where we decode the secrets to financial success and reveal strategies that the wealthy have been using for decades. Today, we're diving into a subject that could transform your financial future, unlocking the power of the stock market to discover top stocks with 7 carefully crafted steps. Imagine having the tools to pinpoint the next big stock before everyone else does. Have you ever wondered how the ultra-wealthy seem to always know which stocks will soar? Or how you could turn a small amount into a major financial victory by making smart choices? Well, it's not magic. It's a blend of strategy, knowledge, and timing. And today, I'm going to share these powerful techniques that can help you build wealth, no matter where you're starting from. This journey may take time, but it's entirely possible. So let's dive in and discover how you can master stock picking and make your investment journey successful. Here's a quick taste of what we'll cover in this video. 1. Overcoming information overload. 2. Deep dive into fundamental analysis. 3. Mastering technical analysis. 4. Using stock screeners like a pro. 5. The secret power of moats. 6. Risk management and patience. 7. Staying consistent and long-term minded. 1. Overcoming information overload. Today's world is filled with an overwhelming amount of financial news, tips, stock advice, and predictions. The problem is that much of this information is contradictory, and it's easy to feel lost or confused. If you're feeling overwhelmed, you're not alone. Even seasoned investors face this challenge. So, how can you cut through all the noise and focus on what truly matters? First, let's talk about filtering out the irrelevant noise. To do this, you need to focus on reputable sources of information. There are a lot of financial blogs, influencers, and even random stock tips out there, but not all of them are credible. Set up alerts for specific keywords or stocks that interest you so you get updates on important news. Follow industry leaders and respected analysts who consistently provide accurate and actionable insights. Join investing communities that offer discussions backed by data and real analysis. How do you currently keep track of stock news? Are there any sources you trust? Drop your thoughts in the comments below. Deep dive into fundamental analysis. Now, let's get into fundamental analysis. This strategy is about looking beyond just the stock price. For example, let's imagine analyzing a promising tech company like Apple. If we're using fundamental analysis, we'll examine several key factors. How much is the company's revenue increasing year over year? Are they managing costs efficiently while maintaining healthy profit margins? This tells us how much profit the company is making for each share of stock. How much debt does the company have compared to its equity? This is critical to determine the risk involved. As one of the richest investors in the world, Warren Buffett is famous for his approach to fundamental analysis. He emphasizes investing in companies with strong management and a competitive advantage. Buffett once said, "Price is what you pay. Value is what you get." Essentially, he looks for companies that are undervalued relative to their true worth. Look for dividend-paying stocks if you're interested in generating income from your investments, especially from companies that have a track record of increasing their dividend payments. 3. Mastering technical analysis. Let's talk about technical analysis, which involves studying stock charts to predict future price movements. For instance, imagine looking at a stock chart of a company like Tesla. When you analyze it, you'll notice certain patterns and indicators that signal buy or sell opportunities. These are price levels where the stock tends to stop falling and may start to rise again. These are price levels where the stock tends to stop rising and may start to fall. The 50-day and 200-day moving averages are commonly used to track the trend of a stock's price. The best part is, you don't need to be a Wall Street analyst to use technical analysis. Thanks to online platforms like TradingView or Thinkorswim, you can track and analyze stock charts with ease. These tools make it simple for anyone to spot patterns and make informed decisions. Have you ever tried technical analysis? What tools do you use to track stock movements? Let us know in the comments. 4. Using stock screeners like a pro. Next, let's dive into how to use stock screeners. A stock screener helps you filter out stocks based on criteria that match your investment goals. For example, you can screen for companies in the tech sector with a market cap above $10 billion. Filter for stocks with a low P/E ratio to find undervalued companies. Look for stocks with a dividend yield over 3% for steady income. Let's say we're looking for growth stocks in the biotech sector. We could filter for companies with a market cap over $5 billion, an annual revenue growth of 15%, and a P/E ratio below 25. By using a stock screener like this, we focus on companies with strong growth potential. The secret power of moats. A moat is a term used to describe the competitive edge that protects a company from its competitors. Companies like Coca-Cola and Disney have built empires because of their strong moats. Coca-Cola's moat is its brand recognition, while Disney's moat is its vast portfolio of content and intellectual property. Look at Amazon. It started as an online bookstore, but over time, it built a technological moat through innovation, creating new services like Amazon Prime, Oz, and Alexa. Now, it's a global tech giant with a customer-obsessed moat that's hard for competitors to break. Do you think your favorite company has a moat? What's their competitive edge? Share your thoughts with us. 6. Risk management and patience. Many investors make the mistake of jumping into the stock market hoping for quick profits, but this often leads to major losses. One common mistake is acting impulsively, selling in panic when the market dips, or trying to time the market perfectly. I remember a story of an investor who bought stocks in a popular tech company during its rapid rise. However, he sold out too early, fearing a potential crash. A few years later, that stock doubled in value. Patience and strategy are key. Portfolio diversification. Spread your investments across different sectors to reduce risk. Invest a fixed amount of money at regular intervals, regardless of the stock price. This reduces the risk of investing a large sum at the wrong time. 7. Staying consistent and long-term. Success in the stock market doesn't come from quick wins, but from consistency and long-term thinking. Small steps like regular investing and keeping emotions in check can yield huge rewards over time. For example, consider index funds. These funds track the overall market and have been shown to produce steady returns over decades. Thanks for watching. Now that you have the 7 steps to uncover top stocks, I'd love to know, what strategy do you think you'll try first? Drop it in the comments below. And don't forget to subscribe and turn on notifications. Together, let's unlock your investment victory.